Jennifer Hunt. Jennifer Hunt, we're live. Facebook Live. Hello, Jennifer.
Hello, Patrick.
Hey, so Missing Millions. We're here to talk about Missing Millions. We're going to get to the point really fast. JG is usually here with me on Saturdays, often having a cup of coffee. He's in a different time zone, though. Yeah, you know what I saw there? Nothing, because it went invisible when you held it up to your background.
I know, it blended in.
But he's out fishing. JG's out. Oh, your sound's going funny. What happened? Go ahead. Try it.
Is it better?
Yeah, there, right there. But every so often when you move, it disappeared. Anyways, we're back. So JG's out fishing. You're here. Jennifer Hunt, for those who have not had the opportunity to meet you, guess what? You are Rain's Vice President of Research. You guys have been very, very busy doing the research. Now, we got some meetings coming up next week, member meetings. We got a couple of wire events coming up next week.
Yeah, our meetings are on the 12th and the 13th. So Western Canada on the 12th and Eastern Canada on the 13th.
So let's talk a little bit about what's going on in the economy these days.
Mm-hmm.
It's pretty weird, isn't it? A way different world. What the hell's going on? Everybody's talking about escalating prices and multiple offers. We're in the middle of a recession. How can that be possible?
Well, let me read this headline from today, actually. Supercharged Canadian housing market roars back to life after lockdown halted 70,000 transactions. Now, that's the headline. But for those of you who are familiar with Rain's What's Behind the Curtain, we unpack what the heck that actually means for you, whether you're a homeowner, whether you're a real estate investor, whether you're a business owner, small, medium, size, big, whatever. We all need to know about what's actually going on in the economy, and we cannot get sucked into those kinds of headlines. So while that may be true, what a lot of folks don't know, except for Rain members who hang out with us a lot, they know that that this roaring, frothy real estate market is actually one of the indicators of the beginning of a slump phase of the real estate cycle, meaning that prices are going to start coming down. They're not right now, but we look ahead by at least 12 months to 24 months. Mm-hmm. And that's accelerated a little bit with the pandemic because of the impact, the just incredible impact. But we're able to see a little bit into the future with Rain's economic turmoil formula and with our real estate cycle. And so I guess the big thing right now is don't get caught in the headlines as per usual, but really understand that that's a key indicator, is one of many indicators that we look at to determine where the market is going. And so when we created our pandemic real estate cycle update May 20th, Rain suggested that basically every market in Canada is entering the beginning phase of the slump. Ottawa is a little bit protected in different.
Ottawa, Victoria. There's a couple centers that are breaking the rules a little bit. They're not breaking the rules. They're just, because of what's going on economically, they're not having the same degree of impact as other regions are.
Well, and largely that's because those are seats of government.
Yeah. And tech. Government and tech, by the way. But let's talk about this a little bit, because we've never been through a pandemic. But the economic fundamentals still apply, and we have to look at a lot of things. So I'm going to speak, you're in Hawaii right now, and everybody should know that you're in frickin' Hawaii. That's just not fair. But anyways, you're in Hawaii. So it would be interesting to hear what's going on in the US a little bit, although we have some pretty good idea. But let's talk about Vancouver. First, let's talk about Vancouver. Then I want to flip to the other end of Canada, well, not quite the end, but central Canada at least, and talk about Ontario, southern Ontario. But let's see what's happening, and let's talk about a little bit what's happening in Vancouver. We know that right now, there was the delay, March, April, May, then everything kind of moved forward. So that what normal spring thing where people are buying and moving, that was held, pause. We move forward. Now it seems to be some churn happening. Oh, you're muted again. There we go. Okay, go. No, you're good. I think it's just the way Zoom's working. Go ahead.
Yeah, so to your point about it not just paused, it was literally frozen. Supply, demand, so nothing happened. Nobody was moving, nobody was doing anything.
And so here we are. Now, but there's a couple things we got to pay attention to. Now, detached homes is actually escalating in terms of demand. there's not a lot of inventory, and we need to talk about that supply and demand issue and why is there no inventory, and what's going on. Perhaps we can consider and we can maybe contemplate that. We're seeing some early results right now. Is the condo market in Vancouver is down about 10% in terms of overall. Now that's an average, and what's happening is people are doing what? They're looking at moving from downtown, and they're getting more into that suburban. And then of course, we're also starting to see some demand pick up in rural because people are wanting more space.
And what we're calling the exurbs, and hipsters.
Yes.
So we can talk a little bit about what those actually mean. But I also want to just actually ground this conversation in something that Rain has been talking about for years, like not just a couple, like years. Probably, well, I mean, I've been hanging around the space, 4.5 now? So for at least 4.5 years, Rain's been talking about the fact that micro suites, small suites, 1-bedroom suites, those are not, let's just keep it at micro suites and at bachelor studios. Not really great investments, because in times of downturn, people turn to having roommates. So they need at least 1 bedroom, maybe 2, so that you can have that buffer. And again, it's another insulation. And what we've seen, that trend has been there. If you look at the millennial report, we were seeing that as well. The millennials don't want the micro suites. They're changing their lifestyles. And this pandemic has simply accelerated the trend that we were already talking about for a number of years. And so for those of you who didn't listen and who bought those micro suites, this is going to be a challenge to unload those, because people do, especially with this pandemic, working from home, maybe kids, 2 people, roommates. I know tons of people are starting to do co-living more than they've ever been before, because if anybody's been through an isolation period alone, a lot of folks are going, this isn't going to, if there's a second wave, I'm not going to be alone. So we're seeing massive change in trends and direction.
There's in these, we don't know if they're going to be trends for sure, but when you look at what's happening, right now they're saying that the mask, the whole mask and social distancing, I mean, they don't see that changing for 2 to 3 years. Those announcements have already been made. So if you're living downtown and you are one of those individuals, and it's a real polarizing topic, isn't it?
Yeah, it is.
Vax, no vax, mask, no mask. There's and that polarization aside, and whatever your belief is, there's a lot of fear in it. And that fear is actually driving those that are most fearful are actually saying, I don't want to be in these high density areas. I don't want to live downtown. I don't want to get on public transit. I don't want to get on an elevator and go down an elevator and into a common area and be affected and be at risk.
Yeah.
So there seems to be
also, Patrick, the amenities that typically attracted people, just like you were saying, so transportation, of course, but also the other amenities like working in a cafe so that they could be out of their space, or being able to walk to restaurants and things like that. They're not, it's not the same experience. And I mean, many of them shut down for a good amount of time as well. So that is also exacerbating and accelerating this change.
And we don't know if it's a trend that's going to last, but it's certainly a trend right now. Here's the point of all this.
I agree.
Right now, there's lots of froth. There's lots going on. You get into that Southern Ontario and you look at what's happening there, and there's even FOMO. I mean, there's like multiple offers and stuff is going, and supply is really low, demand is really high. And so these are times for those of you who are real estate investors, even if you're looking at buying your next home, perhaps, it's time to be cautious.
Your first home too. This is important. First time home buyers.
Yep. It's a time to be cautious. And we need to look into the future, because real estate, whatever's happening today is fine, but we have to look into the future. So, we've had these conversations with RAIN members many times.
Yeah.
Might be a good time right now to sell some dogs. Demand is high. If you've got, if you've got some properties in your portfolio that are questionable, might be a great time to exit those properties. We look into the future and we say, if there's going to be a slowdown, we'll probably see it in the third. My guesstimation is we'll start to see things slow down late in the third quarter and definitely into the fourth. We'll see some pullback.
Yeah.
And I think we're going to see some softening. So that means as an investor or a home buyer, you may be smart to just look at the economic fundamentals, look into the future, because the economy right now is just a false economy. It's supported by government. There's lots of things that are going to start to come down. The subsidies that are all happening, whether it be CERB or wage subsidy, they're all great, but they're going to come to an end, and that is going to have an effect.
Yeah, and actually, on at our RAIN member meetings this week, we'll be diving into a very exciting economic topic called quantitative easing, and what that means. And it's not something that we've really, as Canadians, have had to talk about too much, about the central banks, how they can increase liquidity for the other banks, and how do they do that, and what that process looks like, because we're hearing a lot about quantitative easing and whatnot. And of course, we want to know monetary policy and fiscal stimulus, which we've talked about at our recent What's Behind the Curtains. But now we've got to go another layer, because the Central Bank of Canada has really shifted gears lately, and they're buying some securities. They're doing some crazy stuff.
Yeah.
Also, to whose benefit? And that's, I think, something that we haven't talked a lot about. And when you look at really who is benefiting from the quantitative easing, it's actually the 6 largest banks. And that's not credit unions, that's not small banks, that's not private lenders, where most small businesses, medium-sized businesses, real estate investors are often included in that kind of layer, whether you're a corporation or not. The support isn't there in the same way. And so we need to be really mindful of that, to look ahead to see how that could impact us going forward.
Well, let's talk about a couple of things. First off, I want to say is that I've had members reach out to me, as they often do, and mention that we've been relatively quiet the past 4 to 6 weeks, and really it's summer, right? But but that doesn't mean we're not working in the background. We're really doing some cool stuff in the background. I'm really, really stoked about what we're going to be, how we're going into the fall. Now, having said that, when we look at the economic fundamentals that drive a market, we look at GDP. What do we know about GDP right now? It's really driven primarily by government right now. The subsidy programs, we got borders shut down, so immigration isn't coming in. We've got supply chain breakdown. We've got SMEs, those small and medium enterprise businesses that are struggling, and we've got unemployment.
Before you go further, just to bring some context to this for most people, because I don't think it's not really something that a lot of people talk about, but small and medium sized enterprises. So that's like the private kind of, sort of mom and poppy, like, I know mom and poppy anyway, but like, 5 employees up to 50 employees, that kind of range. I think it actually taps out at like 99, but that's not the majority of them. They're smaller businesses, but it's like, and this is a conservative estimate, but it's approximately, and this is conservative, 80% of all private sector employees are employed by these, but we don't talk about them. So they're a huge employment. So, that is your local cafe or your local restaurant and all of these things that do employ people. And if they're not getting the support that we need, which they aren't, and it's just not available, then that hasn't even yet hit. We haven't, they've been using their capital reserves. There was a couple of support from the BDC. There were a couple of other loans and grants that are available. But again, those eligibility criteria, thankfully, they've been shifting, and it's down to like 20 grand for that payroll or less than. So there's like a few things out there, but not sufficient. But what we haven't seen is, okay, if you're a mom and pop, you're going to be doing everything you can to ride it out. This is your business, your baby, unless you're close to retirement or whatever. And you're like, I'm done. So we haven't actually seen the impact of what this pandemic is, because at a certain point, those small businesses, they'll run out of their reserves. They're not necessarily well capitalized. They might not want to use all of their savings for that. And then what?
Well, I can tell you firsthand from my experience. I mean, I own 2 retail stores, and one of them, which remains closed down. Now, I have to make a decision, and am I going to reopen that store? Now, interesting about it, in Edmonton, my retail stores, ProSkate, I've had for those stores for 35 years. Okay. And I'm now looking at those. I've got, one of my primary locations. My primary location's open. It's up. It's operating. I've staffed it. It's been great. my south side store, I can't get staff. And I look at it and I go, in a time of the highest unemployment, I can't get staff. Okay, so why? Now we know CERB's an answer.
This is a double face palm. I'm just making it up right now.
No, we know that retail is not high end, but CERB's gone, I'm off for the summer. I'm being paid, and so I'm not. So those are real challenges with small business. Now that's only to state this. When we look in the world of business and real estate, we look at what's going on. And although they say, well, our unemployment rates come back down to, let's say 11%, 10, 11%.
10.9.
10.9. So, okay, to be exact. But the thing is that there's a high degree of shadow unemployment that we don't recognize. And so, for example, small business owners,
hey.
What's that?
I've had many rants on this one.
Totally. And so that's all to say this, is all of this is going to catch up. The economic lag time is going to catch up. So this is what we're going to be talking about a lot.
Before you go there, though, I just want to, for those of you who are just tuning in and maybe don't know about what we're talking about with shadow unemployment, and this is something that I'm very passionate about, and so is Patrick, so that makes two of us and the whole RAIN team, is that the way that employment and unemployment figures are calculated is not reliable. So there are a number of different facets and indicators that come into it: labor force survey, your unemployment rates, your participation rates, your employment, and all of these things. And even then, an accurate picture does not exist. And that's what we mean by that, because we don't know. There's so many folks who are no longer even calculated because they've expired through their EI. You have to be in the system in order for you to be counted. So you can't, there is no accurate picture. And particularly in Alberta, where it's been reeling since 2014, 2015, 2016 with the downturn in the oil, still hasn't come back. And as a result, even more so, not going to have an accurate picture of what those numbers. So just for those of you who are just joining us or wanting to understand what the heck shadow employment or unemployment means, it's just that we don't have accurate data. Nobody has accurate data. And therefore the number is bigger.
Here, we don't know a lot of things, but we know there's some things. This is the time to be cautious, number one.
Yeah.
We know that the economy, there is a lag time to, the time of the event, let's say March 15th was it. Let's say that's the marker. And then all of the QE that came in, what the governments are doing, subsidies that are going to run out, and then that's the impact of that. But there's another part of this that if you're in the Okanagan or if you're in Peterborough, you're going, well, what about my yard? What about what about what's happening to housing there? It is, and those are good questions, but it is very, very regional. It's hyper regional, as a matter of fact. And then even within a city, it becomes the pockets within those cities. So there's things to pay attention to. Now, here's a propensity. There is a propensity right now for people to be looking at smaller centers. So in other words, right now we're seeing a demand, increased demand in smaller centers in every province. So outside of the major cities, whether it be Edmonton, Calgary, Toronto, Vancouver, everything is moving out.
Yeah. And why that's become so that was already started, that trend had started before, but now accelerated again by the pandemic and the working from home and working remotely, and also the space and people wanting to garden and all of those things. So we are seeing that across the board for sure. It
is. And so, so for those of you that are listening in this, here's the, ultimately the message is this, next week, RAIN community, RAIN members, make sure you get into the meetings. Jennifer's going to be talking about it. I'll continue to talk about it. We're going to really start to ramp it up as we go into the fall. We're doing some really, really unique research that nobody else is doing. And always remember one fundamental thing. I love realtors, but I love realtors, but we have to look at what they look at is in the moment. Our job is, with a research team that Jennifer, leads, we're looking into the future. That's our job, is to help you look into the future.
And I guess this is a little toot of the horn for the RAIN research team, but again, we published a report of the impact of the pandemic, the coronavirus, on Canadian real estate. We published it at the end of January. It became public first week of February. That means that we were writing about the impact of the pandemic in December 2019. Most people haven't even really heard about it. Now, of course, we could not have predicted the virility of it and the epidemiology of it and whatnot. But the long-term conclusions of that report remain completely sound. And that is that ultimately over time, when the dust settles, that Canadian real estate is going to look even more attractive than ever before. Immigration is going to flood in, foreign capital is going to flood in, and Canadian real estate will thrive. Now, when does that actually come into play? I don't know. But what I want, because it'll take some time for this to all unfold, but what I'd like to also share with people is that, so we were ahead of the game by several months. Then in May, we put out our real estate cycle update and mentioned that in most markets were beginning of slump, which means that it is tricky. You got to look at the REIN's tactics table. It's tricky. You might want to avoid buying and holding. It's tricky to do fix and flips. It's tricky to do rent to own. You want to kind of, as you're saying, be a little cautious. Now's the time to be cautious. That was in May. CMHC and a whole bunch of slew of other individuals and companies have just come out with their real estate reports 3 months later saying the same thing. So we're continuously being about 3 months, if not more, than most. And then so finally on getting to my point is that this week we have been working on a ton of research, really cool report. And that we will be doing the first kind of lift of it at our next REIN member meeting. And it is about foreclosures, how to avoid them and how to buy them.
Don't talk too much about the report yet. Don't let it out of the bag.
Just did.
Okay, so but here's a fundamental thing. And, I want to say this. Understand, we're not talking doom and gloom in this conversation at all. What we're looking at, number one, is if you're an investor, if you're thinking about investing, number one, caution is the word. Look at the research and what's going on, because what we see in real estate always is opportunity. And there is an opportunity in real estate in any market. I don't care what it is, there's always an opportunity. What has to change is your strategy. Now, some investors are playing a little bit of musical chairs, and with the strategies they're using, and we have to consider that when the music stops, is there going to be a chair? So that's the cautionary part of it, is that we can get caught in this world right now that feels like, well, this isn't so bad, and guess what it is? And one thing that we haven't talked about, it is actually the lag time that we have to look into the future. And the one thing we didn't talk about today, and we'll talk about it next week, is what's going on in the US, because the US right now, I don't know how else to say it, it's a shit show. It's a mess. And economically, what's going on in the US, and we're starting to see that because there's a huge flight to silver and gold, precious metals, that's going, and that's always when people get nervous about what's going on with the dollar and the devaluation, gold and silver becomes insurance. And so these are things that are going on in the US that will impact Canada. And so we want to be paying attention to that. Okay, we've been going for a while. We can talk about this all freaking day. But REIN community, REIN members, make sure you get to the meeting. For those of you who are registering for non-REIN members who are registering for a WIRE event, a winning in real estate event, we're going to be talking about economic fundamentals at those events. So make sure you get registered to join us there. We're excited about what REIN has got on tap for you. We're doing some very, very cool stuff. The REIN research team led by Jennifer Hunt is going to be doing some pretty epic stuff with the research and then presenting it. So Jennifer, thanks for your break from the beach.
Oh yeah, well the beaches are officially closed as of last night. So, but the ocean is not closed. So swimming is still very much a viable option.
Okay, well, I'm sure you're going to go for a swim right after this. Thanks for joining us. Thanks for this Missing Millions segment. I'm sure we'll listen to some of JG's fishing stories when he returns next week, and we can look forward to that.
Awesome. Well, great chatting with you, and don't miss millions, people. Now's the time to dig into the research.
Lots of opportunities there. Thanks, Jennifer.